Let's get more into the market now and specifically looking at some technical indicators. Tony Sycamore from IG joining me now. Good to see you, Tony. So when we look at what's been happening with the NASDAQ, it was a little lower overnight, but I mean, Meta, isn't it up for like 17 sessions in a row or something?
It is. And it has certainly been an impressive performance by Meta, but there's not much going on at the index level, Jules, and that is also being reinforced by Fed Chair Powell mentioning that he's not in a hurry to alter the policy rate there. And what that means is we're looking below the index level at things like Meta. We're also looking at things like Tesla. Now, Tesla's share price down 6% overnight, and that is now trading 33% below the high that it struck in mid-December. Obviously, last night's sell-off came after Elon and a consortium of investors offered to buy OpenAI, which was promptly rejected. But in terms of how it's playing out at an index level, you've got Meta doing well, Tesla not doing so well. The NASDAQ is simply going nowhere. It's now into its 8th week of sideways price action. You can see there, it has largely been between 22,000 and 21,000 on the NASDAQ 100. I think we've got a little bit more to go in terms of this correction and how it plays out. Either a break of 22,000, which is the top of the range, that would be a positive development for the NASDAQ, probably gives the green light for a run up towards 23,500. But before that, I wouldn't be surprised if we took another leg lower just to flush out some of those stale longs. We know investors are still sitting overweight the Mag 7. Some of them are doing well, some not quite so well. Potentially time to look at those portfolio allocations. And that could see a retest of that January low coming in around 20,500. Below that, you've got the 200-day moving average and also very important uptrend support. So they're the levels I'm watching.
What about our market? It looks like it's going to go sideways today, but we're in the midst of reporting season and, you know, it has been getting close to records.
Absolutely. Fund managers sitting down now going through the reports, and it's really a time where we just take stock of how these companies are doing and their guidance, how that's playing out for the ASX 200. Well, like the NASDAQ, like the US equity indices, they're in a bit of a holding pattern. I think we're also waiting for the next round of tariff headlines. We know they're coming. I think it was interesting the way the markets behaved on Monday. I think a lot of people went home short on Friday expecting to see another aggressive sell-off. On the Monday, the reopened US equity futures opened higher, and we've seen risk assets broadly trade higher, including crude oil, which I'm sure we'll chat about in just a moment. But in terms of the ASX 200, look, the uptrend remains in place. Just a week and a half ago, we were at new highs. The top of that trend channel now comes in around 86.70. So providing we hold that 83.80 to 83.50 area, I think there's still a chance that the ASX 200, a good chance that the ASX 200 can head up towards that top of that trend channel.
All right, we'll get to oil, but I do want to ask you about the Aussie, because I think a week ago we were talking it was around 60. Now it's closer to 63. So that's quite the big move.
A good bounce there for the Aussie dollar, and it certainly has factored in a lot of the bad news which we saw from that September high. Fell around 12.5%. So a lot of that bad news around tariffs is expected, is priced in. Commodities basically holding at this point of time. And what you can see is the Aussie's popped its head above that downtrend resistance from that September 69.42 high. Still, it's got work to do. Up around this 63.30 all the way up to 63.70, there's a very solid band of resistance. And I need to see the Aussie get above that band of resistance to open up a move higher and to potentially confirm that that 60.87 low, which we saw there a couple of weeks ago, is a medium-term low. At this point of time, the jury's still out, and while it remains below that band of resistance, 63.70-ish to 63.30-ish, I think there's a chance that it can revisit that low, depending, of course, on the flow of tariff headlines and how severe they are with regards to China and our commodities.
All right, let's go to commodities then and look at oil. Up for a third straight session. There's, of course, these concerns about Russian and Iranian oil supplies. What are you seeing with the technicals?
But they're not new. I mean, we've got these sanctions on Russia. They came out in mid-January. It didn't stop crude oil falling for 3 straight weeks. But now there's, I think, probably more reason to be aware of it. We've potentially got the Gaza peace treaty on ceasefire on shaky ground. We also have some of the tariff headlines probably haven't been quite as intense as they were at the start of the previous week. And the most important thing for me is we got down towards that band of support sitting around $70 all the way down into the mid-60s. And if you were short potentially in the lead up to the news we've seen, down around this $70 area would have been a great area. We've spoken about it a couple of times, Jules, that this is probably the bottom of the range. The top of the range now, up towards $78.50 to $80.50. So it just needs to clear that 200-day moving average, which is the orange line. Sits around $74.50 at the moment, and then potentially we continue this range trading, and it can push up towards that $78.50 to $80.50 area.
What about Bitcoin? Is it going to push back to 100?
Look, for me, the tailwinds which supported Bitcoin post the US election, I'm just not sure what comes next in terms of tailwinds. In fact, some of the headwinds, including the fact that the Fed is on hold, the fact that US back-end rates are pushing higher, the fact that we also have uncertainty with regards to tariffs, and Bitcoin sits at the pointy end of the risk spectrum, it suggests to me that tailwinds are now turning into headwinds. And I'm really focusing on this 95,000 support area, because while it holds above here, you would say that the pullback from the 109,000 high has been quite orderly, apart from that little spike we saw on the Monday 2 weeks ago. But by and large, it's holding above 95,000. It keeps the possibility of another push higher in place. But if it were to break below 95,000 and then below that flush low we saw 2 Mondays ago and that 89,000 low from the middle of December, I think you would have to say that we have struck a medium-term high for Bitcoin, and that it can trade back down towards the 200-day moving average. It comes in around 79,000.